Gold is poised to break out above massive resistance that has been in place for over a decade. And if we see a genuine breakout, the gold price might never look back. As a result, right now could be an unbelievable opportunity to buy gold stocks, because if the gold price starts surging, quality gold stocks could end up rising many multiples, with the potential for rising up to 10 times as seen during other boom periods. I'm Biko Konstantinos, and that's what we're going to talk about today. If you like receiving investment opportunity ideas, why don't you give this video a like? And while you're at it, consider subscribing to my channel. I'm Australian and I'm passionate about delivering you quality content. Now back to gold. Gold has been a highly desired commodity throughout all of human recorded history. Gold. Even in the Bible, gold is mentioned 417 times. And I think we've all read stories and seen movies about pirates stealing gold, burying gold, killing each other over gold. And what about the gold rush in places like America, where people literally move to an area just for the opportunity to try and find gold? But is that all a thing of the past? Or could we see a new gold rush where quality gold stocks go ballistic and make some investors unbelievable returns? So why gold stocks and why now? Well, gold may be about to start a multi-year boom, which could see the price rise huge percentages. But with gold stocks, they could rise even more percentages than the actual physical gold. And that's because they have more leverage, because if the gold price, say, rises 25%, a company's profits may rise way more than that 25%, and as a result, so might the share price. Let's take a look at what some gold stocks did during previous boom periods. Here's the chart of the gold boom seen in the late 1970s, and this occurred during a period of stagflation, which means they had high inflation combined with declining economic growth, and that basically sent gold rocketing just in the last 2 years of the 1970s. So during that period, gold stocks massively outperformed the broader stock market, and it was commonplace to see the share prices triple or quadruple in the gold mining sector. And then we saw the gold boom of the 2000s, which was part of a wider commodities boom due to massive demand from emerging economies. And this boom lasted more than a decade and finished with a crescendo of that high around 1900. Here's what happened to Newcrest mining in the 2000s. They basically went from a low at $3 to $4 and then ramped up incredibly and reached over $30, which is a rise of 10 times, or otherwise known as a 10 bagger. And everyone who invests wants one of those. But after the boom was over, the share price fell quickly. So if booms ever go parabolic and make ultra massive returns, you have to remember to take some profits, just like we recently saw in the crypto space. So what are some of the fundamental factors that could create an environment for a new gold boom period? One thing's for sure, there's a lot going on at the moment. We've got very high levels of inflation around the globe, and these have not been seen for 40 years. We've got signs that economic growth is stalling and in some places starting to decline. So it seems just a matter of time before many countries fall into recession. And because of this high inflation, low growth, it puts the global economy into a stagflationary environment, which, as we saw in the 1970s, could put a huge rocket under the gold price. We've got massive levels of national debts, and global debt to GDP is at record high levels. We've got the Russian-Ukraine war, which keeps continuing after more than a year. We've got China and Russia and several other countries trying to move away from buying everything in US dollars, which could eventually lead to the US dollar ceasing to be the reserve currency of the global economy. We've seen some bank collapses, which were only averted due to central banks providing liquidity, or basically going back to quantitative easing, which is what originally got the world into this super high inflation environment. And we've got the US dollar coming off the boil, because when the dollar was rising against other currencies, that put a lot of pressure on the gold price. price, but now that the US dollar is falling back, that's another factor that supports higher gold prices. And that's because more gold can be purchased when the US dollar is weaker. So there's a great many fundamental factors all pointing towards further challenges and volatility for the global economy. And that sort of environment is very, very supportive for gold. We've got the 50-day moving average, which has crossed above the 200-day moving average, which is a very bullish signal called a golden cross that can lead to extremely large moves. And now both the 50-day and the 200-day moving averages are rising, which means we've seen some significant rises in the gold price, and that's now been the case since November 2022. We've got this very bullish cup and handle pattern formation, where the cup portion of the pattern is basically a curve which regains the previous high, and then after hitting that high you have a retracement, and this is known as the handle, but the retracement is only fairly shallow, and that's why it looks like that little handle on a cup. But we're not talking about kitchenware, we're considering what it means on a trading psychological level. And in gold's case, these highs are extremely important psychological levels. It took over 10 years to regain the high and make a new high, but it couldn't keep going, and it retraced and tried again, couldn't break out and retraced, and now is trying again. So these failed attempts are basically setting up a massive amount of pressure, and that's because everyone can clearly see that the gold price around US $2,000 is an extremely strong resistance level. So many market participants expect that that resistance level will hold and keep repelling gold at that level. But what happens if we see a genuine breakout above that resistance level? Well, you might initially get some hesitation, but when it's clear that it's a genuine breakout, you might have a massive influx of new buyers for gold from many investors who were previously sitting on the fence waiting to see what happens. And that ultra strong demand could see gold prices surge, and that momentum can build on itself and end up turning into a major boom. Now, the longer the price hangs around that resistance level, the more chance of a breakout. And it's impossible to know when a genuine breakout will occur, but if there is a genuine breakout, you really want to be invested early before that happens. Which brings us to gold stocks. Now, there's periods when gold stocks outperform the actual gold price and vice versa. But this white line here represents the Van Eck Gold Miners ETF, which is a basket of some of the biggest gold miners in the world. And you can see last year, gold stocks massively underperformed the actual gold price. And a big reason for that was the surging US dollar that happened because the Fed started raising interest rates aggressively. So since this crazy bottom in gold stocks, they've risen fairly significantly, but overall still look fairly weak compared to the strong gold price we're seeing. This potentially provides a great opportunity to purchase quality gold stocks at good comparable prices, because maybe the market doesn't trust that gold will break above 2,000 and they're expecting another fall in prices, or maybe the market just hasn't realized the increased profitability for many companies if the gold price stays at this level or even rises. Alright, so I've provided compelling evidence as to why gold may be entering a new boom phase. But if that does occur, how can you benefit? You can always buy physical gold, and there's a number of methods for that. You can buy gold futures or a gold price ETF, but today we're talking about gold mining stocks. Now, with gold stocks, you normally have explorers and producers. Now, explorers basically dig for gold, which is very expensive and high risk, whereas producers have already firmed up a gold deposit, have a working mine, and are basically digging out the gold and producing it. You have smaller producers who generally have only one gold mine and are normally producing lower amounts of gold per year. And then you have mid-tier or larger gold producers who potentially have more than one gold mine and are producing much more gold per year. Now, gold producing is expensive and it's also quite risky. Larger producers are generally a bit more safe, but some of the smaller and mid-tier are usually higher risk but also higher reward, especially if they can generate great growth opportunities. So if you want to buy individual gold stocks, you have to do your research and consider your risk profile. But if you'd like some gold stock exposure without having to research too much, here's some gold mining exchange traded funds that cover a basket of gold miners. And this can be an effective way to gain exposure to a sector that can reduce your risk significantly. Because if one of those stocks in the ETF goes really bad, you're invested in a whole lot of other ones that can counteract that bad stock. Are we we about to witness a new gold rush for our generation?
Yes! Yes! Yes!
I'm Pico Konstantinos.